Ray Dalio believes crypto may be outlawed. Ray Dalio is the manager of the largest hedge fund in the world. Like many institutional investors from the past generations, he is tentative to fully endorse crypto. That being said, he understands the magnitude of decentralized cryptocurrency. In a recent interview on the David Rubenstein Show, Mr. Dalio said he believes crypto may be outlawed. This is a big deal, and it's important to understand exactly what he meant. We're going to dig into exactly that. We're going to listen to Ray Dalio's interview clip and analyze the potential of crypto being outlawed, but stick around. At the end of this video, we're going to explain 3 ways in which you can protect yourself from the danger of your cryptocurrency being outlawed by the government. Welcome back to Profit Protection. We're bringing you the biggest ideas from the thought leaders in crypto and financial markets. Now let's listen to what Ray Dalio said exactly.
How do you foresee crypto impacting the world order?
I think it's interesting. I have a tiny percentage of my portfolio on it to diversify, but it is a very vulnerable incident because they can track who is operating on it. It can be tracked. It'll be outlawed probably by different governments, and in terms of its size, it has issues. So I think too much attention is spent on crypto, or somebody might be a gold bug, or somebody might be, I don't know, they hold gems or whatever they do. But I think that we're now in an era where we're going to have different types of money. We're going to question, money is a medium of exchange, but it's also a storehold of wealth. And we're going to be questioning what are the right storehold of wealth in the value. And you're going to see around the world, not only the digital versions of that take place in many forms, you're going to see other forms of that competition, I think, in the years ahead.
All right, so Ray mentioned a few things that are important for anyone expecting to hold crypto long term. He mentioned his own personal investments, how crypto can't be tracked, the issue of size, and the disruption that it has brought to the idea of how to best store your wealth. These are all factors involved in cryptocurrency and blockchain technology that pose a threat to organizations like central banks and governing bodies. Dalio is not only a thought leader in the space of finance, he's one of the biggest players. Ray has held the position of co-chief investment officer at the world's largest hedge fund, Bridgewater Associates, since 1985. He has brought to light many important philosophies and business practices related to investment and corporate policy. Ever since he helped found Bridgewater, the firm has gone on to gain numerous big-name clients such as McDonald's, Eastman Kodak, and the World Bank. His expertise in wealth management and the understanding of finance that he has gained through such massive partnerships has made him a go-to voice for many people seeking sound investment principles. Ray mentioned the private nature of crypto, particularly how it can't be tracked. This is one of the biggest benefits of Bitcoin, yet it also makes it a threat to governments and institutions. If you are transferring large amounts of money to and from a bank, your funds will be frozen and they will begin to ask questions. While individuals may not always have anything to hide, the amounts of personal information required and the overreach from financial institutions puts a sour taste in many people's mouths. One of Bitcoin's biggest strengths lies in its ability to stay uncompromised despite the lack of any identity. If you manage to hack some Bitcoin into your wallet, the second it reconnects to the internet, it is cross-checked by every other computer using blockchain. If things don't line up, your funds are invalid. This is great for people who want secure funds and privacy in their transactions. On the other hand, governments and banks feel endangered when they are taken out of the equation. While they say that oversight is necessary to keep watch for criminal activity, the issue comes down to their lack of influence. The government can print more money to influence buyers in the economy. They cannot print more Bitcoin. Dalio also spoke on the issue of size. What exactly did he mean by that? This applies less to the question of government and bank involvement, but it's smart to recognize the limitations of Bitcoin. The Bitcoin network is set in stone and lacks a custodian of any kind. Because of this, the network can only handle the maximum amount of transactions in a given time, and its framework is unchangeable. This may be one way that governments and financial institutions will seek to delegitimize Bitcoin. Luckily, there's no guarantee that this will actually be an issue that ruins Bitcoin. There are multiple workarounds that have been proposed, but we'll save the technical details for another video. One of the most important points Ray Dalio made was how disruptive Bitcoin is. Crypto has absolutely changed the way people viewed assets as a store of wealth. Wealth has been stored in a variety of ways since the beginning of time. Cavemen may have collected seashells, but eventually rare metals and other valuables took over. Once civilizations began to orient itself, paper money was the logical next step. Nowadays, you see the wealthy buying everything from real estate property to entire companies to stash their net worth. Bitcoin and other cryptocurrencies turn this concept on its head. Now, people realize that, for lack of better words, beauty is in the eye of the beholder. Your asset's only worth as much as someone is willing to pay for it. A real-life example is the devaluation of the dollar. More cash has been printed, so people pay less on the dollar. As solid as it seems, the reality is that anything can be an asset. Bitcoin is decentralized. The market is not under the control of governments, real estate brokerage, and other organizations. Once again, we see that the control is leaving the hands of governing bodies. Combined with advancements in blockchain and financial tech, it exposes a huge possibility for innovation and disruption. You may recall Cathie Wood's comments from our previous video, breaking down how she views the advancement in financial technology. Cathie believes that blockchain technology is being spurred forward by the myriad of developments in finance and software. It's an emerging industry that seems to defy principles that formed our current economic system. It is essentially because of these core components of cryptocurrency that make it a target for regulation and possibly being outlawed. Because of how new and disruptive the concept of cryptocurrency is, governments and banks have been caught on their heels. This is a huge deviation from the paths that all financial transactions have been taking place on. Not only are they unable to track who is paying for what, but they can also not freeze funds. There are certainly arguments for regulation, such as the need to curb criminal transactions for illegal services. On the other hand, there is an attractiveness to the layperson's ability to manage his own finances privately. This gray area will undoubtedly cause contention when legislation is introduced to regulate crypto. China is one prime example of why cryptocurrency may be outlawed by other governments. It also shows how easily it could be done. China has a different economic system than ours. The economy is basically a free market, but the national government's influence is strong, and corporations are completely at their mercy. In May of 2021, China banned all financial institutions and payment companies from providing services related to cryptocurrency transactions. This essentially smothered any chance of crypto being adopted by companies or citizens. Unsurprisingly, the government pointed to criminal activity as its main concern for shutting down cryptocurrency usage. This is an important example to note. The corporate influence and free speech in our country will certainly make it a challenge for the government to dig their fingers into the crypto market, but it does not make it impossible. Just like other countries, our financial institutions are subject to government regulation and therefore are at risk of being banned from being involved in cryptocurrency. El Salvador shows us the other side of the coin. Rather than shying away from the decentralized nature of cryptocurrency, the country actually adopted Bitcoin as official tender. Okay, we get it. This video isn't about how Bitcoin could be adopted by the government, it's about how it could be banned. Anyone who holds or seeks to hold cryptocurrency should know that the future isn't all that bleak. While governments have been moving to stifle decentralized currency, other countries have integrated it into their monetary systems. Today, you can use Bitcoin in El Salvador to buy a Coke at any restaurant you wish. Your bank must hold crypto if you wish it to, and you are allowed to pay other people directly using the cryptocurrency. It is cases like El Salvador that show us how Bitcoin can seamlessly be adopted and used en masse. So, if there actually is a possibility that the government may take back control and ban crypto like Bitcoin, how can you protect your wealth? The reality of the fact is that we don't live in El Salvador. If you do, thank you for continuing to educate yourself, and congratulations. For those of us still waiting to see how our government reacts, it's smart to know how to protect yourself from this worst case scenario. Here are 3 things you can do to protect yourself from a possible Bitcoin ban. Number 1, diversify your assets. Where is your money right now? Is it in dollars or euros? Have you invested in real estate or fine art? The simple answer is that diversification is your friend. If Bitcoin continues on the path to mass adoption tomorrow, you want to be holding some today. Fears about the future should not discourage you from grabbing a piece of the pie this early in the game. That being said, no one in their right mind holds their entire net worth in cryptocurrency. Volatile prices aside, we just don't know for sure where this is headed. At the end of the day, you should only be holding Bitcoin that you can afford to lose. We really are talking about the worst case scenario here, but better safe than sorry. Number 2, only hold and transfer Bitcoin on secure exchanges and wallets. As we discussed earlier, the case for crypto crackdowns doesn't always appear in the form of a nationwide ban. Often, the government will pursue banks, exchanges, and other financial institutions for regulatory purposes. This is a tip you can apply today. If you are or are planning to hold crypto, make sure that the institution that keeps custody of it for you is trustworthy. This will protect your funds today and in the future. Research your exchange or wallet to understand how they would be affected by potential regulations. Number 3, invest your money in assets that are related to crypto. Everyone and their dog wants to buy Bitcoin. While holding the cryptocurrency itself is a direct way to reap the benefits of adoption and further growth, it's not the only way. You can gain exposure to the escalating crypto market by buying into mining companies or companies that hold their reserves in crypto. In a recent video, we explained Michael Saylor's investment thesis regarding Bitcoin. He is the CEO of MicroStrategy, ticker MSTR, that focuses on business intelligence, mobile software, and cloud integration. None of that is directly related to crypto, but Saylor converted nearly all of MicroStrategy's cash reserves into Bitcoin last year. This was done as a hedge against inflation, but also garnered the attention of many Bitcoin enthusiasts who recognized that a boom in price would benefit the company greatly. This is not a foolproof way to protect yourself from harsh cryptocurrency regulation, but if Bitcoin were to tank, your MicroStrategy stock will not take such a large hit. The same is slightly applicable to mining companies if they can adjust quickly enough. We are happy to help you in your crypto journey, but please remember that none of this should be taken as financial advice, and any decisions you make need to be done with due diligence and extensive research. Thanks for tuning in to our analysis of Ray Dalio's Bitcoin conversation. If you enjoyed this video, please hit the like button to show your appreciation for our efforts, and consider subscribing to Profit Protection. Happy researching, invest safe, and invest smart. We'll see you on the other side. Take care.